Hello everyone, this is the pre-market report video for today 28th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Day before yesterday, the premium of GIFT Nifty with the spot market was over 90 points, which was clearly unusual, and yesterday, as we suspected at the time of opening, premium dropped to just 30 points, and throughout the trading time it did maintained that 30 to 50 points premium. And today early morning 3 AM Indian Standard Time, GIFT Nifty closed at 22,214, which means for now, based on premium at the opening, it's indicating 40 to 80 points gap up. I mean, it's not alone the factor, we need to consider the US future market also. Again, which we'll discuss in the later part of the video. Other than that, regarding yesterday's Indian market, as most of us know, Nifty opened gap up and extended its gain and closed over 100 points positive. Here, the entire 100 points contributed by two stocks. One, Reliance, and two, HDFC Bank. Here, Reliance alone contributed for over 75 points positive. Regarding the reason, yesterday, Goldman Sachs released a complete analysis report on Reliance Industries. In that, the base case scenario from earlier around 3,150 rupees per share, they raised the price target to 3,400 rupees per share. Again, they cited various reasons such as favorable valuations and a potential earnings boost with capital expenditure peaking, etc. In addition, in the worst bear case scenario, they expect the stock to crash just to 2,540 rupees per share, and in the bull case scenario, the stock price to increase up to 54% from the present price level. Here, this analysis report was one of the main reasons why Reliance Industries was super positive yesterday. Then, the another takeaway from yesterday's market is SEBI released 25 list of stocks such as SBI and Bajaj Auto, etc. for the same day settlement. If required, please pause and have a look. These are those 25 stocks. Institution wise, for the second day in a row, both FII and DII were net buyers. FII net bought for 2,170 crore rupees and DII net bought for 1,200 crore rupees. So those were the quick takeaway from yesterday's market. Then coming to US market, earlier there were some little nervousness that because of all these recent debt ceiling issue, whether S&P Global might change the US rating outlook kind of. But it didn't happen. S&P Global affirms the stable outlook with a AA+ rating. This, along with some anticipation around Fed FOMC member speech in some economic club in New York, made the 10-year bond yield to drop below 4.2%, which in turn made the US market very positive. And because last 3 days in a row, US market closed on a negative note, and this short trading week all created some profit booking. In the end, Dow Jones increased 1.22%, S&P funded up by 0.86%, and Nasdaq increased by 0.5%. Again, in case of US VIX, it dropped 3% and moved below 13. Here, Nasdaq positivity was trimmed by semiconductor stocks, and regarding its weakness, we did discuss in detail in the last Tuesday pre-market video, so don't want to bore with the same information. And the Dow Jones rally was mainly supported by energy stocks because of the recent oil price increase. Yesterday, US government did release their country's crude oil inventories report as of 22nd March. Basically, oil inventories increased by 9.3 million barrels, which is normally against the oil price increase, but the refined product gasoline inventories dropped by 4.4 million barrels. So, both cancels each other and oil roughly trades around same place as Tuesday night. At the time of this video, WTI crude trading around $81.75 per barrel and Brent crude closed near $86 per barrel. Regarding Indian ADR, both banks closed more positive than the equivalent Indian market, and for IT stocks, Infosys and Wipro, both in Indian market, closed significantly negative, but in ADR in the US, both of them managed to close positive. So, all indicating the positive trade. Those were the things happened yesterday in the global market. Now, let's discuss new India stock related info. First, as per RBI's mandatory requirement, NBFC's upper layer has to demerge and list within 3 years. In order to comply that, yesterday in the aftermarket hours, there was a news report about Bajaj Finance that they are going to demerge their housing finance business as Bajaj Housing Finance, and going to list it for the valuation around 9 to 10 billion US dollars. On the outside, this news looks very positive for Bajaj Finance. So I think market will also take this as positive. Let's see. Second, RBI announced the next 6 MPC meeting for the next financial year. If required, please pause and have a look at those dates. And the first MPC meeting, or simply India's interest rate decision, is scheduled to meet between April 3rd to 5th. I mean, it's next week. Third, I'm not sure about the influence, but as per Money Control website, in the last 2 days, Axis Bank customers have been receiving number of credit card international fraudulent transaction related message kind of. I think it's very negative for Axis Bank, but GDR didn't react negatively for this. Let's see. Finally, yesterday RBI issued the clarification guidelines for the alternate investments that lenders can invest in the equity share of debtors company. Earlier, this RBI's restriction stance in alternative investment funds did affect at the mid-cap and small-cap heavily. Now, removing that stance is mildly positive since the scenario in mid and small-cap space changed now, like stress test, share price wrath issue and mutual fund restriction. So, I don't think changing this one rule will turn the sector, but still it's a positive move for the mid and small cap sectors. As a summary, US market closed positive with the help of low treasury yield. However, in the economic club speech, Chris Waller mentioned that there is no rush for the rate cut, which in turn again increases the US treasury yield back to the same point as it was above 4.2. As a consequence, at present, US future market is trading slightly in the negative side. So I would say at the time of US market closing, global momentum was super positive, but now it's comparatively less positive. Anyway, Indian ADR and GIFT Nifty as it is, both indicating the gap up opening of 40 to 80 points. And also, as most of us know, today is monthly expiry, financial year 2024's last expiry. So there is a high chance market will have some related volatility. Anyway, moving on. Yesterday, as per stock open interest, Power Grid, UPL, Tech Mahindra, Coal India, HCL, L&T Mindtree and Hindustan Unilever got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Z Entertainment, Titan, Indraprastha Gas, Bajaj Auto, Asian Paint and Hindustan Copper got an increase in open interest with a positive price close indicating the long build-up. About the things to look out. Just now, Bank of Japan released their last interest rate meeting minutes, so we can expect Asian market to react for that. Honestly, I'm not sure whether it's positive or negative. After that, during our market time, UK's GDP data and German unemployment rate are due in the afternoon, and in the night, US GDP data and weekly jobless claims and home sales data are some of the items we need to keep an eye out today. Coming to technical, as I said, Nifty opened 50 points gap up and closed at around 22,100. Thus, on the daily chart, it formed a bullish candlestick pattern with an upper shadow. Here, on daily chart, Nifty closed above the downward sloping resistance trend line and also it's now trading above all key moving averages, which is positive. However, like day before yesterday, because of the last hour trading, hourly momentum indicator is having a negative crossover now. So both daily and hourly momentum indicator is showing the divergent signals which most probably will lead to a more consolidation. Hence, as an overall, it's still positive but with range bound 22,200 to 21,900 level. A decisive break on either side will define the momentum. Then in case of Bank Nifty, it opened 40 points gap up and closed at around 46,800. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bullish candlestick pattern with an upper shadow. And it was also in the range bound for the fourth consecutive session between 46,500 to 47,000 level. Breaking the upper resistance might drive the Bank Nifty towards 48,000, whereas break below 46,500 level might push down towards 46,200. As per the monthly options data, the maximum call option open interest was at 22,500 strike, followed by 22,600, 22,400 and 22,200 strike, with meaningful new call option writing at the similar strikes. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 22,100 and 21,900, with new put option writing at 22,100 strike and then 22,000 and 21,900 strike. Thus, from the options data, the immediate resistance is at 22,200 level with the support at 22,000 and 21,900. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.